afternoon, everybody. Thank you for joining us for today's webinar. For those that don't know me, I'm Lauren Oakley. I'm the Events Coordinator at Staffordshire Chambers of Commerce. I'm delighted today to have Sarah and Rachel, who will be talking about the Winter Economic Plan. And before they do so, I just want to go through a few housekeeping rules. We cannot see or hear you, so please do not worry. If you're still in your pajamas or eating or drinking, don't worry, we can't see you at all. So today we'll be running through the webinar. However, there will be a chance at the end to ask Sarah and Rachel some questions. This can be asked through the Q&A function, which is at the bottom or top of your screen, depending on whether you're on a laptop or a computer. We have no other things to announce today. So Sarah and Rachel, whenever you're ready, please. Thank you.
Great. Thanks ever so much, Lauren. I really appreciate it. First off, welcome everybody to this afternoon's rescheduled webinar on the Winter Economic Plan. We were originally due to do this 2 weeks ago, but the Chancellor, Mr. Sunak, announced various changes in the measures that we were due to discuss around an hour before our presentation, which changed pretty much 75% of what we wanted to explain to you. So we rescheduled for today, and surprise, surprise, here we go again. Is this the final version? No, he announced further changes around lunchtime, which we've tried to absorb within our presentation today as best as possible. Please bear with us though, because we don't have all of the details, just the headlines to discuss with you at this point in time, but we will do our very best. So as it says on the screen, as Lauren's just mentioned, I'm Rachel Buxton, one of the directors at Thomson Wright. I'm very passionate about helping businesses in our local area. As such, I am one of the local area board members for the Staffordshire Moorlands Chamber of Commerce. And also we've got Sarah here.
So I'm Sarah Bowen, I'm the tax director. Like Rachel, equally very passionate about helping businesses in our area. Proud Stoke girl, and so proud to help all our clients and other businesses in the area. Obviously very passionate about tax, which is why I'm here talking about what we're talking about today.
And as Lauren's just said, we can't see you, so if anybody eye rolled when Sarah mentioned she's passionate about tax, we can't see you, don't worry.
We don't know, but I am. So I think this slide shows a bit of the journey we've been on trying to get this presentation together, Rachel. So on the 25th of September, Rishi stood up and announced the Winter Economy Plan with his sort of emphasis on protecting jobs and supporting businesses over the coming months. And at the time, he was replacing what we call furlough with the new job support scheme. He was doing some more self-employed grants, but perhaps not to the same extent that they'd done before. And he was doing lots of good things in a very positive. We're moving forward. We're getting back on our feet. On the 22nd of October, he did make some tweaks and make things bigger. I think that was as the tier system sort of started to kick in, and more regions, including Stoke, moved up the tier system. I think he started to realise that perhaps we weren't as on our feet as he perhaps hoped we were. Then, of course, at the weekend, we had strictly late, because we announced that the national lockdown, and again, Rishi then really had to go a little bit back to the drawing board. And then finally today at about 12:30,
we're jinxed.
He stood up again and made some chances. So as Rachel says, please bear with us. We've tried to update our slides as best we can. If we've made mistakes, we do apologise, but literally we were rewriting these slides
until about 5 minutes
ago. So the first part of this, we're going to concentrate on what he's done for employers. And as you can see from that slide, some of what we're going to talk about has changed. So we are going to talk about the job retention scheme, what we all know and love as furlough, because we've still got it. We're not going to talk about the job support scheme because it seems like that's gone.
Temporarily delayed.
We are slightly going to talk about the job retention bonus, but again, it seems from today's announcement that may well have gone. Whether it's a pause or a gone, we don't know. And we'll also talk about the Kickstart. So job retention scheme, or good old furlough, as we all call it. So this slide here is just talking about the original job retention scheme, the furlough that was in place from March when the pandemic and when the lockdowns first started. And obviously it gradually sort of crept away from 80% support to 60% support, paying your own NI and pension contributions, and was due to end, and Rishi was very firm that that was going to end as of the 31st of October. However, when lockdown 2 was announced on Saturday, he also announced that this scheme was going to stay, and he said initially it was going to stay for as long as lockdown stayed. He's almost taken it back a stage, so as you can see here, he's back to paying 80% of the wages. The only difference really from the start of furlough is we're still paying our own employers' national insurance, and we're still paying the pension contributions. Because this is essentially a new version of furlough, it does mean that people who have not been furloughed before can still use it. It is still designed around the flexible furlough that we had that came in June. So what the slide says there is you can put somebody onto this scheme if they were on your payroll at 1 minute to midnight on the 30th of October.
So when you say they're on the payroll, do you mean that their contract of employment had started?
No, it's not quite as straightforward as that. As they did with the other one, that somebody had to be on an RTI submission. So if somebody does their October payroll and they run it on the 31st of October, you might have a problem with a new starter. If you run obviously the end of the month Friday, hopefully a lot of people run the payrolls then, because you needed somebody to have been on an RTI submission. Again, because once they announce the new scheme, they don't want somebody very craftily putting their mum on the payroll and furloughing her, or the granny or whatever.
It sounds a little bit sceptical, but it does happen.
It does happen, and you get the question, you get people saying, I'm going to hire my son, and can I immediately furlough him? No. So that's what that's designed to stop.
So when we're talking about that then, so can we amend an RTI that was already in, or effectively backdate it?
No, we shouldn't backdate. RTI is real time. It's not designed. There are rare occasions when you make amendments when things genuinely go wrong, but generally no, we leave them alone. Now, because it is effectively a new job retention scheme, details on how to make the claims haven't been announced yet, but I assume it'll be very similar to the previous way we made claims. And the other thing to notice is when he spoke today, while he's announced it is staying in place till the end of March rather than finishing in December, he has said that in January they will look to see if they feel that employers are more able to contribute more. So the 80%
could dwindle down, as we saw on the previous slide.
Yeah. But what he said today is he wanted to give people a bit of certainty through the winter, so we know there will be some form of furlough, and we know till January it's going to be at 80%. I think it will depend if we're still in lockdown, how the world's looking in January, and let's hope it's looking better than it is now.
Fingers crossed.
And so I think, because even more important to talk about now, because it's carrying on, is the fact that you can have an inquiry into your job retention scheme claim, and we have seen these now. We have seen clients getting letters. I'm sure you've seen them as well, Rachel.
Yeah, and seen some from my own clients, and also on some accountancy forums. Yes, I am sad I am on accountancy forums, but people on there raising the fact that HMRC are sending out phishing letters as such. Very official letter. We think you may have an issue with your claim, almost implying that there is an issue when actually there may not be. They're just very much fishing for information on that basis.
I mean, what the Revenue have said is they're not looking for innocent errors. They're not trying to catch people out. But I think it's been well publicised. I think almost every time people talk about this scheme, they talk about the fact that there are people making, or they suspect there are people making claims they shouldn't. There's a line for people to tell the Revenue if they think their employer is making them work while they're claiming furlough for them. So they are looking for people who are misusing the system, and that means going and looking at all sizes of claims, big or small.
There's no de minimis.
There's no de minimis. No. So what we would say is, if you've made a claim, make sure you've got your ducks in a row.
Yeah, I was going to say it comes across as a bit of a doom and gloom slide, but if you've made a valid claim and you are happy and you have the evidence to back up that claim, don't worry about it. You won't have any issues.
No, I mean, what I would say is just make sure, because it could be a while before you get that claim, keep a file. If you use the Revenue's calculator, which we all did to work out what you've claimed, keep a printout. I would say more so than ever, keep a printout, because actually, as furlough went along, the calculator changed. So it might well be that you made a valid claim at the start and used their calculator, and naturally, if you put the figures through now, you get a slightly different number. But if you've done a valid claim at the time and you've got all your calculations, if somebody comes to ask you about them, you can show them. If you've got your letter that says, look, you know, my employee agreed to this, I made all the right contract changes and all the good stuff we have to do, you're going to be in a better position.
Yeah.
And just keep that on file, and then there's nothing to worry about. Like I said, we did leave this slide in, I think, just to prove to ourselves we've done it. So the job support scheme has now, we would guess, been cancelled, given that furloughs carry on. Whether or not there'll be a version of it post-COVID or in the next tax year, I don't know. One thing that actually, it isn't on this slide, it was on one of the later slides we originally did. One thing that was different with the job support scheme than the furlough scheme is that people could look on their personal tax account and see if somebody had made a claim in relation to them. Now, whether they'll bring that in for the job support scheme, I don't know, but yeah, that was something that I think, to stop fraudulent claims, it let employees know that they've been claimed for. I think this is worth a bit of a conversation, isn't it, Rachel, about whether or not people use furlough?
Yeah, certainly. I think there's many things to sort of consider with regards to this. The new furlough scheme is much more beneficial for employers than the job support scheme would have been, for example. So at the moment, the new furlough scheme that's in place now, the wages of the staff, the 80% is covered by the government. The only cost to the employer at this point is going to be any auto-enrolment pension contributions and any employer's NI. So it's a very minimal cost for an employer to keep that employee on the books and give them a monthly income. If we get to the point where that starts to dwindle, as we've spoken about with the review in January, it may be that employers need to consider whether or not that role is actually feasible. If it's going to start costing them more to keep that open, that's the point where we need to make this.
And so that's the point of this slide, is just to say, especially now because furlough is more generous, remember that this is only temporary. Hopefully things will pick back up. You'll need staff then. You don't want to have to train people from scratch. So hopefully, this is exactly why Rishi's done what he's done in keeping us on the furlough. So the job retention bonus. This is a bit of an odd one to talk about.
It wasn't a particularly popular policy when it first came out, because it was seen to be rewarding employees that had furlough staff early in the process. It was giving them money for nothing. If they'd been able to keep roles open, that sort of implied that they were recovering quite well. And this was effectively another bonus for them at the end of January. You could apply for in February, March time, and you'd have got £1,000 per employee.
That being said, I think a lot of people will have been aware they were entitled to it. And certainly at the start, because the first lockdown happened in the way it did so suddenly, people probably sent people home for the start, perhaps did a month on furlough, just while they got themselves together, while they got the PPE sorted, while they got the premises COVID safe. And if you'd furloughed 100 people at that point, and they were legitimately furloughed, you were probably in February looking at 100 grand cash injection at a time of year when money can sometimes be quite useful for businesses, and you've probably plugged that into your cash flow. Now, I think we need to be clear. What Rishi said today was, this was designed to motivate people to keep jobs ongoing into January. Because he's extended furlough, he doesn't think it's needed at the moment. And he implied that meant it was going away completely. Whether he'll resurrect it in January, I think he'll very much see what the backlash is.
Yeah, we've got question marks over whether it's a full cancellation or whether it's just postponed to later next year, maybe, let's say. But as I say, the fact is, if you've budgeted or put into your cash flow forecast that you've got an injection from the job retention bonus in sort of February time next year, it's going to be something that we need to sort of try and plug with other means. So we'll come on to that in just a little while.
So the Kickstart Scheme, which was something that he announced in September, was this scheme, I think he referred to it again after the questions on Saturday, was this way of trying to help out the youngsters who are obviously going to really struggle to find work because of the pandemic. So it's for new placements for 16 to 24-year-olds who are claiming universal credit and at risk of long-term unemployment. And it was designed for all employers to sort of find roles, create them. And if you've got less than, I think it's 30 roles, you can go on a portal and advertise your job, and somebody else will help you find people to fill those jobs. And it's quite generous in that it covers, 100% of the minimum wage, it covers the NI, it covers the pension contributions. And it was what you have to demonstrate is that you are giving people during that job skills that they can then take on and move into new jobs, whether that's on the job training, or it can be as simple as employing somebody and letting them have interview practice or things like that. So I think if you're in a business where you think this could be useful, it's definitely worth having a look at.
Completely. Okay, I think this moves on to the different types of funding available. So I'm just going to touch briefly on the loan schemes that are in place at the moment. So these are the government-backed finance opportunities that businesses have got the ability to tap into. So for the purpose of this webinar, I'm focusing more so on the small and medium businesses. There are additional schemes available for large businesses. So if it is that you are a large business and you need more information, please pass your contact details on to Lauren. I'm more than happy to catch up with you off air to see if there's any assistance available to you. So I appreciate many of you are going to be familiar with the loans that we're going to talk about today, but I think it's really worthwhile as just recapping the assistance available, and then I can explain the changes that Rishi has made to the original terms of those loans. And we will discuss the considerations that you need to make before you actually apply for these loans. Okay, flip over. So the bounce back loan is the first one off the mark. Now, many of you will be familiar with this. This has been one of the most popular policies that the government have actually backed since the COVID pandemic started. In all honesty, I've sort of sold this as a bit of a no-brainer to many of my clients. It's a fantastic scheme that they've come out with. We're talking, it's a fast one-page application. It's a bit of a self-certification. Self-certified, so, you will be asked questions as to whether your business was solvent at a certain date. You will be asked questions as to whether you were struggling before the pandemic and things like that. So as long as you can safely say that, hand on heart, that was the case, you were okay, then, self-certification process. Generally, many clients have had their funds approved and in their bank account within 24 hours. Yeah, I've certainly seen that with my clients. It's fantastic plug in the cash flow funds for many businesses. Initially, it's a 6-year loan term. I'll touch on that in just a second. And it's a low interest rate of 2.5%, which is fixed across the term of the loan. So you know exactly what you're dealing with, which is fantastic for cash flow purposes. Now, the loans under the bounce back scheme is anything from £2,000 up to £50,000, and it's capped at 25% of your business turnover. Okay. Now, the first 12 months under a bounce back loan is repayment free. You don't need to pay anything back to the bank. So you've effectively got free money for the first 12 months because the government they cover the interest charges with the lender. So it's free money for 12 months. Now, the reason I love this scheme so much is, yes, obviously people need it immediately to obviously plug any gaps in the finances, but what a lot of clients have also done is they've used it as a bit of a slush fund, a rainy day fund, if you like. They'll have taken out the bounce back, as a just in case pot on obviously for things like this, for things like the new lockdown. If we were to go into another lockdown again, have you got the cash reserves to see your company through and to cover the expenses that you will be incurring through that period where you're not able to trade? And that's exactly what it's there for. So if it is that you take the bounce back loan, put it in a slush fund, and you're able to steer the company through and steer your business through this pandemic, and at the end of the first 12 months you've still got that money sitting there. One of the beauties of this scheme is there are no early repayment charges. You can pay that money straight back to the lender, clear that debt, and it won't have cost you a penny. So the confidence that you can have from having a pot of money available to you hasn't cost you a bean.
No, and I think that's really important because I think because we've done another lockdown, we don't know what else is coming. people, it's just good to have that money, isn't it, ready?
Yeah. As I say, I'm going to touch on some of the changes in a few slides time, but I just wanted to recap the original loan schemes that were set up. So the Coronavirus Business Interruption Loan Scheme, which for the purpose of this I'm going to call CBILS, because I don't know if I've got...
Say all that big title?
I'm not sure we've got time for the full title every time. So as you can see, it needs to be a trading activity. More than 50% of your turnover needs to come from a trading activity. This is a slightly more complex process. So it's a full credit assessment, so you will need more information. It's not necessarily a self-certified process this time like the bounce back is. So the likelihood is you are going to need financial projections and cash flow forecasts, possibly business plans, and generally management accounts to show the business viability up until the point where the pandemic hit. So that's something to bear in mind, and again I'll touch on how we can help you know, fund possible external advice to help you with that process a little bit later. So just bear in mind you will need more information to be able to apply for the CBILS form, CBILS finance.
Takes a little bit longer then.
It does take a little bit longer than the bounce backs, not as quick. So just again, bear that in mind. So as you can see from the slide, the facilities available are generally from £1,000 up to £5 million. It's interest free for the first 12 months. Now, unlike the bounce back loan, which is repayment free for the first 12 months, generally CBILS require repayments from the point where you take out the finance. Now, some lenders I have seen have offered repayment holidays, but that's not a given across the board, so please check with whoever it is that you're approaching for that finance. Now, whereas the bounce back loans are 100% backed by the government to give the bank the security that they need, the CBILS are 80% backed, okay, they're 80% backed by the government. In terms of security that the bank are requiring, they will not ask for any personal guarantees from you as the directors or as the business owners up to a borrowing limit of £250,000. Anything that you look to borrow over that amount, what they will do is ask for a personal guarantee, but only on the 20% that you need to provide the backing for. Now, one of the good points that have been put into part of the legislation for this is, as part of those personal guarantees, the bank will not be asking for security against your personal private residence. So your home is safe.
Your home's safe, which is really important, isn't it?
It is. So again, initial term is 6 years, just the same as the bounce back loan. But even so, that the CBILS is a really useful scheme to tap into. It's not just a loan scheme.
Right.
It could be overdrafts, it could be mortgages, it could be asset finance. It comes in many different shapes and sizes, if you like.
So it's definitely worth talking to somebody about
completely. Initially, I'd always point you in the direction of your bank, your own bank, your current account is with. If not, it's quite easy to find the information on the British Business Bank's website. If not, obviously there are many independent commercial finance guides available to help you out on that basis. Okay, so moving on to the Pay As You Grow announcement that came as part of the Winter Economic Plan. As we've mentioned, cash is king to all businesses. Cash flow is going to be fundamental moving forward. You can forecast as you know, within an inch of your life, but how do you predict things like these lockdowns? You know, it's almost impossible at the moment to do an accurate forecast moving forward. And I think the government appreciate that that's difficult for companies. That's difficult for businesses to do that at the moment. What they've done on this as part of the Pay As You Grow scheme, it's effectively a repayment system. It's a new part of the repayment system. So with your CBILS, with your bounce back loans, initially the 6-year term, you can apply to extend that up to a decade. So you can almost halve the payments that you're going to have to make and extend the period of that loan.
Which helps massively, doesn't it?
Which is, yeah, it's fantastic. The other side of things, as you know, at the moment we're in peaks and troughs for businesses. So, you know, we could be, you know, ticking away as we were doing before.
Yeah, a few weeks ago.
In August, you know, start of September, everything was looking up, everyone was getting more positive, and now we're back in another lockdown. I think that has also been taken into consideration. So one of the things that they've brought in is the option to request interest-only periods within your CBILS or within your bounce back loan term. Now you have the option of doing up to 6 months, and you can do that 3 times within your loan term. What they've also done is realise that cash cash flow is really going to be hit hard in certain instances, and you can apply for a full payment holiday.
Wow.
Which will be up to 6 months, but you only get one of those options throughout the whole of your loan term.
That's a bit of a one shot. Hold that back. Probably go for your just interest only payments if you can.
Completely.
But things really, cash flow really gets hit, then you can think about 6 month payment
definitely.
holiday.
Now, I just wanted to touch on the considerations that you need to make before you take out these loans. So obviously it's great to have access to this finance, but what you've got to bear in mind is obviously the affordability of these loans at the other end. The idea is they're there to tick you over until you're in a point where you're successfully trading, and then we can start paying those back, but they will need to be paid back at some point. I appreciate that the government are backing these loans, whether it's 100% on the bounce back or 80% on the CBILS, but you as the business owner, you as the applicant are liable for these loans.
Right, so I've been listening to you talk about that. I've got a business and I think, well, I'll take a nice bounce back loan and I'll pay myself a nice dividend. I'll repay my loan account, or I might even borrow some money from pay myself a bit of a bonus. So you tell me I can't do that, Rachel?
In a way, yes. I think there are many things to consider before you do that. We've spoken to insolvency practitioners.
Yeah, definitely insolvency practitioners will be looking how you've used this
completely.
Money.
If it is that you take a bounce back loan, repay your director's loan account, let's say, and then bump the company in a few months' time, I think there will be questions raised at the point of liquidation as to whether or not you will be liable for any of that loan. So just bear that in mind. It will be questioned. It is not as straightforward as take a bounce back, pay yourself back. That's not how it goes.
Or take a bounce back, extract the money and kill the company off. People are going to look at that, aren't
You've
they?
got to bear in mind that dividends are paid out of your profits after tax. So if you're a limited company and you're a shareholder of that company, you can take a dividend once you've paid your tax liabilities if there are profits available. If you're a struggling business through the pandemic, you need to be able to prove that you are still able to have profits after tax.
If you've got ability to pay dividends, people are going to be asking why you took a loan in the first place.
And I think there's something written in the legislation about furlough claims whilst taking dividends and things like that. Is there a wrong?
That was going to be in the job support scheme.
Right.
Furlough doesn't have that, but again, I think when they start to look at claims, I mean, obviously what there's been is a lot of big companies have chosen to pay their furlough. The likes of Primark and things, I think, made a public gesture of not taking that money, didn't they?
And Ed Sheeran, apparently. Ed Sheeran's pub in Norfolk.
There you go.
So there you go. Anyway, so moving on. So as we've just mentioned, the deadline to apply for the bounce back loans and CBILS was initially the 30th of September. It was then moved to the 30th of November, and we are now sitting at the 31st of January 2021.
Place your bets where it'll end up.
Who knows? Who knows? But let's not look a gift horse in the mouth. Let's just roll with it, because these are really good facilities that businesses can tap into. So that was one of the things that was announced. Also, as we've mentioned, the bounce back loans, fantastic facility. £50,000 being the limit, providing your turnover level allowed. In the first wave of lockdown, many businesses tapped into this. Some were a bit more cautious than others, didn't necessarily max out their lending. So if it was that, for example, you could have tapped into the 50k, but you only tapped into 20k's worth of borrowing, at the time, that was it. It was a one-shot.
You'd had your chance.
Yeah, exactly. There was no ability to apply for another bounce back loan to take you up to that extent, up to that threshold of the 50k. But we've now got the ability to top those bounce back loans.
Right. So if I took 20 and I need another 20,
you can now do that. Yeah. So from the 9th of November, top-up applications are available. Okay. What I would say, and what I've just popped on the slide there, as we've discussed, the CBILS do require more information as part of the application process. Sometimes banks will come back with additional questions in regards to the business trading and the activities.
And it's the cash flows and things you've
ready, so please bear that in mind when you're making applications. Don't leave it until the last minute. Okay.
So this is another thing that's changed quite a lot, which is the Self-Employed Income Support Scheme, which are the grants that were paid earlier in the year. There's been 2 grants already paid to people who were self-employed, providing they met all the criteria. And so in September, Rishi announced that there would be 2 more of those grants. And since then, the first of those grants has changed twice. So it was initially going to be 20%, then it was going to be 55%, and now it's 80%. So now it's possible to get a grant of up to £7,500. And also one thing he's changed is when we can apply for that. So although it's designed to cover to the end of January, I think the application process for that is opening sooner, because he realises by closing things like hairdressers and things like that today, he's got to help those people out, because he's literally cut their income off as of today. And okay, we've got a few more days notice, and we all ran to the hairdressers on Sunday, but that's it now. We are closed for those people. So he's made that grant a bit more generous, and he's brought forward when you can apply for it. There will be another grant, but a bit like how furlough may change in January, he's not telling us how much we're getting on that second grant. But I think the final point on that slide is a bit of a kicker, really, because to get this grant or these grants, you need to have been eligible for the first two. So I'm sure you've got clients, Rachel. I've certainly got clients.
I've fielded many calls over the last week or so, whereby clients who didn't qualify, as you say, for the first round of grants because, for example, they'd only started self-employment last year, and on the 2019 tax return, they'd still got employment income plus a small amount of sole trade or partnership income, and it didn't hit the 50% threshold. Now we're another 12 months down the line. They've done their 2020 tax return, full self-employment. They've been hit massively by the pandemic, and there is no assistance available. So unfortunately, I'm afraid we've not got good news for those people. So the reason that we've put this slide in is we're just trying to field some frequently asked questions that we get from clients.
Things that people ask us.
So the purpose of this slide is obviously people ask us how these measures that the government have offered sit within their accounts. Are they taxable? Is it free money effectively? But unfortunately, as you can see from the screen in front of you, the business support grants from the rateable value aspect that we receive further in the year, so that's the 10 and 25k, the job retention scheme, the self-employment income scheme, all forms part of your taxable income, whether that's through your limited company or whether that's through your self-assessment tax return.
Definitely the self-employed scheme, they've made it very clear all the way through that will be subject not only to tax but also national insurance, so that puts you over the national insurance threshold. We're not sure yet how that's going to feature on your tax return, but we know it is, and certainly preparing accounts, the job retention is another income line on your accounts, and is taxable. Job retention, it matches money you've spent.
So it's tax neutral because obviously you've got the wage cost going through there, but either way, the income that you receive from these will be part of your taxable income on your accounts or tax return. Okay, so I'm afraid it's giving with one hand, taking with the other on that.
Taxing it a little bit to get some of it back. Another thing that was announced in September, which is again a sort of a follow-on. So back in July, when we were all supposed to pay our second payments on account, we were allowed to defer those, and we were allowed to defer those without any interest. So what was announced in September was these new online time to pay, which is a service that's been around for a while, but it was extended. So basically, if you owe the tax man between £32 and £30,000, so if you can't afford your £33, Rachel, you can set up a direct debit and spread that over 12 months. You need to have done your 1920 tax return, because presumably people are also going to be paying that, including their balancing payment in this. But one thing to notice and to understand about this is once you go into this, they are going to start charging interest from January. So your July payment up to now, you've not paid any interest on. So if you can pay that in January, pay that in January, because if you go onto these time to pay services, you are going to be paying some interest. Anything bigger than 30,000, you still have to speak to HMRC.
Okay, now the interest element is quite interesting in a way, because self-assessment will have interest charged on it.
It will.
Whereas the VAT deferrals that many businesses had for the March to June VAT returns, they were automatic deferrals. Initially, you were given until March 21 to settle that liability. That was interest-free for that period, so no interest was charged on that. Now, HMRC, I think, have recognised that there will be a lot of pressure on businesses at the start of next year, and to increase, obviously, their chance of recoverability of that VAT liability. What they have now done is they have implemented a new option to pay in smaller repayments.
Right.
So if you contact them in March next year, let's say, and say, we don't think we're going to be able to settle the last year's liability by the end of the month, you can opt in to another 12-month instalment of those payments, so splitting it over the following year up to March 2022, and that again is interest free. So it's a little bit strange that we've got interest being charged on the self-assessment but not necessarily on the VAT.
And I think that's very much to show that they thought that people, they let us defer that at that time because we just got into lockdown and people were struggling and they wanted you to have that money available.
Yeah.
And businesses are still struggling, whereas with your self-assessment they sort of expect you to have put it to one side previously.
Also, just a little point on the VAT deferral aspect. I had a client the other day who gave me a call to say that initially he deferred his March payment for his VAT, but found that actually the business was doing quite well. So in July, he decided to pay that March liability, paid it to HMRC. Then he's logged on to his HMRC online portal for VAT to see that that liability is still showing as outstanding. So he obviously panicked. I rang HMRC to speak to them, and it is a known system glitch within the HMRC's computer system, whereby because within their system that March deferral is now showing as due in March 2021, it will still recognise it as outstanding until we hit that date.
So the computer won't let him know.
No, computer says no. So if it is that you've paid that and it's not showing on your account, please don't panic. It is a known glitch.
I mean, it's still worth checking that they've got
certainly.
But don't assume that it's gone to somebody nefarious.
And sticking along the VAT theme, I'm sure many of you heard in July, he announced a reduction to the hospitality and tourism sector.
So this was part of the summer statement when we did eat out to help out and all that good stuff.
Now, initially, the 5% reduced rate was until the 12th of January, which is a very strange date. But as part of the winter economic plan, he extended that to the 31st of March. So that's good news. Now, the reason we brought this up is also just to point out, if you are a smaller business, especially in the hospitality sectors at the moment, the flat rate scheme could be massively beneficial for you. As you can see from that table at the bottom, the rates by which HMRC specify for your sector are so low at the moment. So for those that don't know, the way the flat rate scheme works, if you have got a business with turnover under £150,000, you can apply to use the flat rate scheme. What that means is it's a much more simplified process in terms of generating your VAT returns. You don't look at the output that you charge on sales, take off the input.
So it saves admin as well as everything else.
It does. What you do is you take your total sales position and you apply the specified percentage that HMRC have put on the screen there to your sales, and that is what you pay.
So if you're a really small B&B at the moment, you opt into that scheme and your turnover is below that threshold, you're not going to pay any VAT.
Correct.
That's fabulous.
And as you can see, I know pubs are shut at the moment, but it's still worth considering. 1% charge, until March next year. It's certainly worth exploring. I appreciate it's only going to apply to a small number of those watching today, but it's something to consider. Okay, so moving on now away from sort of HMRC and the tax side of things, we're into grant funding. So through Staffordshire Growth Hub, there were some grants launched, I think it was last month, a couple of months ago, basically aimed at two areas: small and medium businesses who deal specifically 100% with other business customers, and also tourism businesses. Now, these were designed to kickstart, they were designed to cover specialist advice with dealing with the COVID pandemic. If you needed to buy if you needed to buy any kind of small machinery, small plant or machinery, as a result of the pandemic. So that would be covered.
This is extra things to keep people safe.
Yes, exactly. So, if it's a case where you're,
if you've gone to contactless or something like that.
Exactly, things will be covered. So website changes, if you're selling online, things like that, yeah. That would be covered by these schemes. Now, they have proved massively popular, so I'm afraid they were paused very quickly. The reason I've left that slide in is, if there is a pot left, we're hoping that there will be more funds released to help businesses in the same way.
I think part of the reason it's paused is perhaps people need to just be a bit careful, making sure you meet the criteria. Because the other thing as well is, I don't need to put anything in if I'm going to apply for this funding, do I? It's not match funding, so I can.
It's not. So the grants that are available were 100% of the cost.
That's really.
So you don't need to put any of the company funds towards the expenditure. But unfortunately, the Growth Hub, I know, were inundated with applications. Not all of them were eligible, and I think they're having to reject quite a few because businesses weren't eligible. But in all honesty, I think that shows the desperation of some businesses to try and get assistance through this time. It's not all doom and gloom though. What I've put on the screen there is a slide that's been provided by the Stoke and Staffordshire Growth Hub. That lists all of the grant funding opportunities that you've got in the area at the moment. The reason I wanted to draw this to your attention, there are many pots available, but if we look at the third line down, the Investment Readiness Programme can be used to help businesses who need to seek external advice in getting plans and forecasts together for a CBILS application.
I was going to say, so if I'm going for my CBILS, I can apply for one of those loans. Yes, and we are lucky in this area, aren't we, with the amount
very
of grants?
lucky. Compared to neighbouring counties, we are able to tap into a lot more grant pots. So it's really worth getting in touch with the guys at the Growth Club. I've got the contact details at the bottom of the screen. I'm sure Lauren will be able to pass the details around if you need them after this presentation. Okay, so I think that moves on to the final stage of this. So originally this slide was talking about the tier support available,
because obviously we were having tiers. They were going to give us lots of different, and obviously the job support scheme was very much, you had an open and a close depending on what tier you were in.
So we're now in a national lockdown, and in all honesty, a lot of those the support measures specifically relating to premises are still in there. So as you can see from the screen, if your business is forced to close because of a lockdown, as now, if you've got a rateable value, so RV is rateable value, you'll be able to find that from your council tax bill. It's normally shown on there. So if the rateable value of your premises is up to £15,000, which in all honesty would mean you probably don't pay business rates because you would get the small business rates relief, you will receive a grant of £667 for every 2 weeks that your business is forced to be closed. If your rateable value is 15 to 51, that goes up to £1,000. And if your rateable value is over £51,000, you get £1,500 per 2 weeks of closure. Now, I appreciate that's not a lot of money in all honesty, especially if you've got a business premises with a rateable value of £51,000. That's a large premises. To have £3,000 a month is not going to cover a great deal. The other thing just to note, as earlier in the year, we had a very similar situation when they did the first round of £10,000 and £25,000 grants. There are going to be discretionary pots available through your local authority. We don't know how much. We don't know what form that's going to take.
He definitely sort of implied today when he stood up that local authorities are going to be provided with money. Obviously, some of it will be for those first three things, but I definitely think there'll be some for discretionary. And what I'd say there is, I've certainly got clients who at the first time there was discretionary fund applied, and they've just gone back to their local authority now and said, any chance, will there be something else now we've gone into lockdown too? And they've been put on a waiting list, and at least if you've asked, don't ask, don't get.
So when we're talking about the discretionary fund, this is for people who don't have their own business premises. So it could be people in shared office space. It could be beauticians renting a room in somebody else's salon. It could be somebody working from home. These are all things that, wouldn't hit that the first 3 points that you see there in terms of the rateable value grant. So don't fear that there will be some form of discretionary funding available through your local authority.
It's just
the thing to do is keep in touch, keep an eye on their website, and that's where you'll find the information relating to those. One thing I do realise that I've forgotten to mention is the Future Fund, which we've not done a specific slide on at the moment, purely because it doesn't really apply to that many businesses in our area, but it's worth noting. So the Future Fund is a convertible loan that the government are offering, but it's for more, maybe medical businesses, a lot of research and development businesses where they're used to obtaining equity financing and equity funding from investors. So you need to have already obtained £250,000 of equity investment at some point in the last 5 years. And it's a loan that will be match funded. So you still need to generate whatever you apply for. You need to be able to equally raise that amount of money. And that's from 125 to 5 million. So that's for businesses that can show continued growth and innovation beyond the pandemic. And it's a convertible loan, which basically means if you can't repay it, the government will convert that into equity within your business. Okay, so I just wanted to drop that in there because it is an important piece of funding that we've not mentioned so far. Okay. So I think that comes to the end of it. I think we've rattled on and tried to get through as much as possible for you.
Like I say, do appreciate that. Obviously, we have changed that at the last minute, but if anybody's got any questions, I think Lauren's ready to read those out to us.
Thanks both. That was really informative presentation, and we really appreciate that. Obviously, with the recent announcements, that you've adapted the presentation for us. If anybody has got any questions for either Sarah or Rachel, please put these in the Q&A function, which you'll find at either the top or bottom of your screen. I know we had one that came through in the middle of your presentation. So in regards to the self-employed scheme, can you apply if you already have savings?
Savings are not factored into the self-employment income support scheme. It's purely based on the impact. All you've got to do is self-certify that there has been an impact, an adverse impact on your business as a result of COVID. Now, with this round of the self-employment income support scheme, they have given more detailed guidance on the website of what they consider to be an adverse impact, whereas it was very vague in the first round. There are some more specific guidance available.
And
on
I think as you
website.
Apply, it asks you those questions.
Yeah.
And I think certainly when it was announced in September, it was going to be a little bit harder to get if your business was still going. But I think with the lockdown, it's going to be easier to prove that people have been affected because we have been affected.
Lovely, thank you. Chris has just said, thanks ladies. It has certainly been a challenge to keep up for all of us. And Kate said, thanks for her answer. And we just had another one through. Is there a minimum amount of time someone can be furloughed?
It's normally a week. Obviously, for this new version of furlough, we haven't had the guidance. So I'm having to guesstimate based on the old furlough. But it used to be, they like you to look in 7-day blocks.
Originally, I think when we were at the first lockdown, it was a 3-week minimum, wasn't it?
But once we went to flexi, it normally looks at, and obviously this, although it's back to the 80%, this is still the flexi, that you can still have somebody in for a couple of days and furloughed for a couple of days. It's still designed to give you that flexibility.
Yeah. Great, thank you. And we have got a few more minutes, so if there is any more questions that anybody wants to ask, them, please feel free to do so. As Sarah mentioned, we are able to send Sarah and Rachel's details after, if that's okay with you, if nobody wants to ask, feels like they can ask the questions live. So we'll just give it a few more minutes. It does take a few minutes to come through. Don't think there is any more. Looks like you've answered everybody's questions already, guys. You're all okay. You're all good to go. But no, I'd just like to thank both Rachel and Sarah. Again, we really do appreciate all the recent updates and all the information you've provided with us. It's been
a challenge, but we've enjoyed it, haven't we, Rachel?
Good. And I would also like to remind everybody that this has been recorded, and so have all our webinars. So this can be found on our webinar library, and it'll be uploaded early next week. But I'd just like to say thanks to all those that have attended. Please stay safe, stay well, and hopefully we'll see you all soon. So thank you. Take care, everybody.
Thanks so much.